Welcome to the Weekly Trend Trader Trend Following Strategy. For over 20 years now, I've been trading financial markets. One of the things I've realized by talking to a lot of people is there is a great interest in how the financial markets work. But what I also realize is that a lot of people just don't understand the game. So let's make a video about it. What I'm going to do is I'm going to share with you exactly how the strategy works. We'll build up a chart as to what's required, and then I'll take you through how the strategy works with the buy and sell signals. So the first thing that you need on the strategy is a 2-year candlestick chart. Before we go any further, don't forget to subscribe, like for the algorithms, and share with your friends because they might want to make a part-time income. Okay, so you need a 2-year candlestick chart, and these candles are weekly candlesticks. Now, some might not be familiar with candlesticks, so I'll just briefly explain how they work, but particularly weekly ones. So here we've got the open of the week on this green candle, then we've got the close of the week, then we've got the high of the week and the low of the week. On the red candle, it's reversed. So we've got the open of the week, close of the week, high of the week, and the low of the weekly candle on the Friday. Then here, on these other two candles, these are two very significant candles because they tend to come up or appear at turning points. So we've got the low test bar and the high test bar. The low test bar, the market opens here on the Monday, trades all the way down here during the week, then gets brought all the way back up here to close at its high on the Friday. Very, very important when we see that pin bar or low test bar, as it's called. High test bar is obviously the opposite. Sometimes you'll see the market run up to a high, test the high, price gets rejected on heavy selling from the high. So we open here, run up here, close here, and we'll close at the low of the week. That's called a high test bar and usually signifies a reversal in the trend. So we've got our weekly candles. Let's go back to the chart now. What do we need next on the chart? Well, we need the 52-week EMA, the exponential moving average. 52 weeks obviously is a year, and 52 weeks gives us an average of what the price is doing. We want that 52-week moving average line to be rising from left to right on the chart. Then we want to plot on there a 2-week moving average, which is our signal line, and a 4-week exponential moving average. And you'll notice that we've got here the swing high, the swing low, swing high, swing low, swing high, swing low. And we'll look back in a minute to see exactly how the strategy takes us through the swing highs and swing lows for the wins. The next thing that we need to plot on the chart is the RSI indicator, or the relative strength indicator. You can see this here at the bottom of the chart. It's beautiful, the RSI. What this is, it's like the heartbeat of the market. Just like we have a heartbeat and the doctor looks at the heart for the systolic rate and the diastolic rate, exactly the same with the markets, and the RSI shows us that. So the heart pumps out, then it relaxes. The heart pumps out again, then it relaxes. The heart pumps and relaxes. The market goes up to the swing high, then relaxes to the swing low. The market pumps out to the swing high, then it relaxes to the swing low. And what we're doing is we're going to take advantage of those moves and trade those moves. Okay, so now we've got everything ready on the chart. We've built the chart, we've got everything ready. Let's look at the strategy. So what we do, when the first thing we want to see is price action above the 52-week moving average. So all the candles are pretty much above the 52-week moving average, and the 52-week moving average itself is rising. When the 2 crosses the 4 above the 52-week moving average, we take that as a buy signal. And we stay in all the way up here, keeps us in, lovely example, to the swing high, and we take our profit when the 2 crosses back below the 4. Look at this next example here. Here we go again. Market's above the 52-week moving average. We buy when the 2 crosses the 4. We stay in all the way up to the swing high. Market crosses again. 2 crosses under the 4. We take our profit. The market drops back to the swing low. And again, the market stays above the 52-week moving average. 2 crosses the 4. We buy. And then we let the market run again. Very, very simple strategy, but very, very powerful. But when do we not trade this strategy? If the market is above the 52-week moving average, we're buyers of that market. If the market is below the 52-week moving average in a downtrend, then we take every sell below the 52-week moving average. So if the 2 crosses the 4 below the 52-week moving average, we take the short. If it crosses again below the 52-week moving average, we take another short. But there is a period of time when we don't trade the financial markets, and here's an example of that here. Notice how this market starts to trend down at the beginning and then trend up, but then it goes into this tight range. Look at the 52-week moving average. It's no longer going as it would do in a bear market or in a downward trend. It would start at the top left corner of the chart or run to the bottom right corner of the chart. It doesn't do that. Or in an uptrend, it would start at the bottom left corner of the chart and go up to the right hand corner of the chart, and price action will stay above. Here we're ranging. This is a market that we wouldn't trade. 52-week moving average is totally flat. As we can see, we can get a lot of up and down movements in between the 52-week moving average, which is called a whipsaw. It's a market that we just wouldn't touch with a barge pole. We wouldn't trade this market. So that's the market when we sit on our hands and do nothing. But there are times when we're in a trade, when we take the trade and also we sit on our hands until the trade tells us to exit the trade. One other thing that helps us when we're trading the strategy, the market tends to create patterns. Now these patterns can appear either in the chart itself, which is very, very helpful when we see certain patterns I'm about to show you, or they appear on the relative strength indicator. If they appear in the relative strength indicator, then it's a good indication of a turning point. If it appears in the chart, it too is a good indication of a turning point in the market. So here are the patterns. You've got a double top, triple top, and a head and shoulders. If you get a double top, triple top, or a head and shoulders pattern, either in the chart or in the RSI, we know that the market is likely to reverse. And then looking at the other side, if you get a double bottom, triple bottom, or an inverse head and shoulders, then we know that the market is about heavily sold off and about to reverse back to the upside, as denoted by the green candles, the green arrows on the pattern here. So that's very helpful. When we look at that in the RSI, we can clearly see, if you look at this second one here, we can see a little bit of a double bottom there. If we look at this last move up, we can see a much clearer double bottom there, and the market goes to the upside. So it's very, very reliable, these patterns, when they appear. And that's why we take you through the markets every week, and you follow us and subscribe to us and like what we're doing. We'll be able to show you each week when these things start to set up and what they look like. Let's look at a very important point now though. A very important point for the strategy, now you understand it, is do not trade or look at weekly candles during the trading week. Only trade the market on a Friday just before the close of the market and the weekly candle. What do we mean by that? Well, on a Monday or a Tuesday, the market might move up. Wednesday might move down. Thursday might move up. Friday, it might close in either direction, up or down. But what happens on Monday to Thursday is totally irrelevant to the strategy. because we're trading weekly candles. So we only look at, for this particular strategy, we only look at the weekly candle on a Friday at the close just before the market is finished trading. Any trades that are to be placed are, obviously the candle hasn't finished forming yet until Friday. So just before the close, perhaps 10-15 minutes before the close, that's when we make all our trades. That's when the candle is finished, and that's the only time for this fantastic strategy. Hope you found this very informative. We are going to be looking at the markets. We are going to be analyzing the Asia market every week, the European markets every week, and the US markets every week. Don't forget to subscribe if you haven't already, to like for the algorithms, hit the notification bell, and we'll see you on the next video.